Well, hopes Greece's financial problems will be contained and optimism over the US economy have helped commodities over recent days. For the latest, we're joined by Jonathan Barret, the Managing Director of Commodities Broking Services. Jonathan Barret, welcome to the program.
Morning, Ali.
In fact, if we look at, hopes for a global recovery, they've really become quite a force for positive sentiment over recent weeks.
Yeah, Ali, there has. This optimism is certainly starting to engulf some of these markets, in particular some of the commodity markets, because people are actually looking forward to what could occur with this optimism, and that optimism will lead into demand for commodities. So we have had a good run, and I think the expectations are there for it to continue.
Well, you just returned from Hong Kong. What did you see there? How optimistic did it make you?
I tell you what, a lot, because wherever you look, there's a lot more building occurring, and there's just this buzz which suggests that, well, what is there about this GFC? It's certainly moving, and when you look at it, that's a gateway to China. So that optimism, I think I've come back fully optimised.
Well, let's look at oil, because there's been some questions lately over whether what's happening with crude stocks means the current prices are not sustainable. What's your take on the impact of increasing stocks at the moment?
Yeah, Ali, that's been a big debate amongst a lot of us at the moment, because we've seen builds throughout the last couple of months, and in fact the last data we had was quite a massive build when we only expected a small build. And I guess in my term, the fundamentals should say that oil should be coming lower. But I think it's this optimism that we're seeing that is actually holding the price higher. And I think if that optimism and that confidence continues to move, so will the price of oil. Oil, in reality, should really be round about that US $70 a barrel, given the current set of fundamentals we have. But at the moment, it's not. It's trading just shy, or just at 83, 83.5. So it's the optimism, I think, that's carrying the price, not the fundamentals.
Well, if that's the case, how long do you see that optimism, I suppose, holding and the price holding in that sort of 80, 85 US dollar a barrel range? How sustainable is it?
I think it is sustainable, and I think you could probably see prices continue to move a little bit higher. One thing that comes with this optimism is also a weaker US dollar. People move away from the risk aversion trades which were long US dollars and start to sell them. Now, you have that optimism and you also have a weak currency, and that will help stabilise prices and see prices move back through that US $85 a barrel.
Let's have a look at a couple of agricultural commodities. Sugar futures have fallen to their lowest level in a year. Prices are now down some 47% since February. What's driving those declines?
Look, sugar's been a phenomenal market, particularly over the last 6 months, but at the moment we're seeing India, which had favourable planting conditions, is actually coming up to an increased annual yield of something close to about 27%. The USDA just recently reported that their gross intake would be about 27% from last year. So you can see, as India, as a major producer, this additional amount of sugar on the market is seeing prices come under a lot of pressure.
But if we look at prices going in the other direction, soybeans prices are up. Is that on expected demand from China?
Very much so. In China at the moment, we've got an interesting situation where we've got quite a heavy drought. They're living through a drought period. Now, as a result of that, China has picked up her imports in soya, and when you see China around any form of market at the moment, people start to weigh in with the premium, and that's why we're seeing soybean prices up close to 7% just over the last week and a half.
And is China buying more already?
Yes, China have stepped into the market, and we'll see that continue. We'll probably see the price of soybeans supported on any dip by orders from China.
Jonathan Barret, many thanks for joining us.
Thanks, Ali.